Hello, and welcome to August 25th, Stochastic Uptrend starting over. We found a flaw in our situation before with the scanner, and that was we were using Stochastic full for an indicator, and then the scanner was using Stochastics full here, but the other ones were slow. So the point was that the stochastics indicators were mixed up. So in speaking with my instructor at OTA, senior instructor Arthur Evans, so shout out to Arthur Evans, that the best one to use is, and we're going to go ahead and load up the scanner now with the new stochastics, is use Stochastics Fast. That's what we'll be using. We're using Stochastic Fast. And if you notice here, I have now changed to Stochastic Fast. So that is what the scanner has now been reset. So uptrend optionable, $10 to 100, 2 million shares. Now, these variables right here, you do not have to open up the program. If you see the little button here, this is your program, and you can go here and change your internal instructions. But here you can change this on a whim, and then, of course, change the category you wish to scan in. So this is a start over for those who are coming on you to getting involved with forward testing. And so forward testing essentially means this: we're going to scan, we're going to get some results. Then the results are going to go to the charts, and then we're going to mark the chart up, and then to see if it repeats it, then surfaces back up on our radar in the future, and then see what the results are. And the idea is to prove that the underlying trading strategy works first before you dive the trading strategy into options trading. All right, so that said, we have loaded up Stochastics Uptrend. We are now correlated with the Stochastics Fast, and it's all optionable. And now we'll stretch this down a little bit longer, see what less we'll do, and let's do it. So there goes the scanner, and the scanner's come back, and it's come back with 15. And Ford is leading the way with 51 million shares traded today and a sizzle index of 0.696. I'm starting to study this to find out how we can correlate this info from Thinkorswim to helping us hone down some better choices. I mean, we got 15 here, and depending upon your budget, you want to be able to pick the best of the 15. So that will be something that's going to have to be looked into. I said, I just started studying this. This is all new territory, applying better tools to enhance the scanner. So with that said, here's how we do forward testing now. Now that we got our list, we can move our list slightly off to the side and get our chart, and we can collapse it even more so. And now we go right click, come down, go up to the red designation. That's what the red one stands for. And we have been here. We have been here to look at this already. Ford, yes. And the reason why Ford has popped up on my list, and I did it from another scan, is that I'm also trading in my larger account, which is to my inner circle, that we're trading to pay back for the new car that I had to buy last December. And now we're down, the car cost me $37,000 out the door, including my time spent at the dealership, because I do charge for my time back to the market. And the result is that we are now only $8,000 short of paying off the car. So having trade to pay the car off since December in the larger account. So we already marked off the chart. You can see there's our entry will be off the high of the body and not the wick, because look how wide that is. We don't want this too wide. We want to keep it really not too tight, but not so wide that we don't have. Another way of judging it too, when you use your 3-to-1 ratio ruler, see if the 3-to-1 falls in past, and you can see right now the upper price channel shows the price at one time was as high as 1640, and our third ratio is at 1570. This would be considered a good quality trade, because of that fact is that we know that price has been here before, therefore price has no fear going back to it. Price, excuse me, price has a fear of going higher unless there's a strong catalyst behind it, such as, let's say, great earnings report, or new product development or something that's really favorable for the company. Here's another good example on Western Digital. In Western Digital, we would go from here, the body, to the swing, to the not the swing low, because the swing low is so close to the lower price channel. I would go to the lower price channel. Give it just a little bit of room. Now remember something also too. We are applying the exit rules, and the exit rules are: we will start off with the initial at the what they call the first ratio risk. We're risking 1 to make 3, but once price has cleared, along with the wick, what you call clear the gantry, we move the price to the EP stop, entry price stop. Now, having read or actually listened to many of Jack Schwager's books and the traders, a majority of traders, once price has initiated and started climbing into the profit zone, they will move it to the opening price ASAP, regardless of the wick. Yes. Now, there we go. Jack asked him, so don't you get stopped off quite often? He says, yes, but the answer to the losses will be smaller. That's the point. The losses will be smaller, and we saw that happen on Bank of America just a couple of days ago. It exited at an EPS entry price, and it only lost 12%, $60. That's all I lost was $60 on a Bank of America trade, one contract. Can we afford to lose $60? Yeah, because why? We have a chance to make $180 down the road. It's going to happen. Good stocks will stay in the game. And if they don't stay in the game and they go dead up, then you can transfer that loss to an ETF, which will never go bankrupt. And then you trade the ETF. If you can be a loss leader trader, you can trade that ETF until you win back that loss, or you just let it go and do scan trading, such as my daughter does. So let's go on now. Now, SoFi here. Now, it's really interesting about SoFi. They have the naming rights of our new football stadium here in Los Angeles, or the greater Los Angeles, in the city of Inglewood, which is south by southwest of downtown Los Angeles. And that stadium now is open and already has customers. So again, this is so close to the channel that I would go to the channel. Again, why? On the anticipation that once this trade triggers and gets past our entry point, and I'm not being very exact, this is just in forward testing. You don't have to be a sharpshooter. You just got to be a hand grenade. And the bottom line would be is that once price has cleared that gantry, we're going to move the stop here anyway. We're going to move the stop to the EPS. The anticipation is that we're hopefully we got good stand indications, and we have 15 here. So let's go on here now to by Chevron. Oh, this is good to know because Chevron does owe me some money and on my larger account, and now I'll go look at Chevron to do this trade. So there we are, and now this, see how wide that is? That, oh yeah, that's $6. That's $6, which is almost 3 times. Look at this. It's almost 3 times ATR. So what am I going to do here? Well, we're going to do this trade, but once it clears and opens, we're going to go to EPS. Now, we could use the Jack Schwager traders mentality. Once price enters into the trade and is past the entry point, moves the stop to the entry point. And if it reverses, you're going to lose 5. I've seen it as small as 4.4% to as much as 30% on the return back to the EPS. So, but the point is that we're keeping the main thing is risk management. Keep the losses small, because smaller losses are easy to overcome with a big win, even if you have a collection of small losses. So if Bank of America lost the next 2 trade and one more trade at $60, that's 100. That'll be 120. But then it comes back and I win back my 3 to 1. I get my 180. My 180 return minus the 60 lost prior, I still make $60 profit. The point is, you don't have to have a win ratio. You have to have a win return. ROI return is what really counts. Going on now to see what we have in here. Now, also too, while we're walking through this, these trades are not recommended trades. Why? Because I don't know your particular situation. I don't know your risk management. I don't know what your budget is. And you from a trading also too, if you're under 25,000 and you want to also blow and build your account. Both words work together because I think this is a 10% allocation. As you have seen, this is a 10% allocation trade. You watched it for 2 years. 2 years come 2 weeks, we have been doing 10% allocation. So there we are with as ASE Corporation. Then we have now lifts on the radar, and again right here, and so our stop will be here for it's $4. So this is a 2 ATR. But remember, the anticipation is once it clears the gantry, go to EPS, or once price has cleared. And we are coming up to September 1st, and September 1st is our Elvis shift. Every month, the first of the month, we reevaluate, and if we do a tweak, we're going to do it on the first of the month so we can track it. So I think seriously, listening to all of Jack Schwager's books, and I've listened to 4 of them so far, and all the traders, of course, the one that stands out the most is Ed Thorpe, because of Ed Thorpe is, I can't call him necessarily a neighbor, but he does live approximately about 35 to 40 miles south by southeast of me in the city of Newport. Okay, so there we are with that. Oh, ETQ. Oh, this is good. ETQ also owes me money in the other larger account. This is going to be kind of cool. So that'll be something to look forward to when I go over to the larger account for setting up. Again, there's the dip right there. It's a $2 spread, and the ATR is 83 cents. So it's about 2.5 again. But again, with anticipation is that once it clears the gantry, we're going to move those stops. Okay, going on. Now, why we're marking all of these up? Because we're starting the scoreboard all over again. Yeah, we had that scoreboard going for us quite nicely, but because we were getting so bogus losses and all, and I started reevaluating and said, oh, I see where the problem's at, because I look at the chart and I wouldn't agree with the chart, and the chart would be reading correctly because, and see, Stochastic Fast, that's what we're looking for. Okay, so, oh yeah, no, these are not on my lost leaders list. This is open market. The only ones that are on my lost leaders list, but not here at Alpha, but on my Prime account, is Ford, because to pay back the car, Chevron, because I do occasionally buy gas from Chevron, and therefore I trade what I spend on gas back to pay me back. EQT, which does owe me money, and AR, I don't know who AR is. AR is new to me, so this is for our forward testing. This is what forward testing is about too. You're going through and you're marking up approximately. Today we're marking up 15 possibilities, and then when we'll make a list of this. So here's what's kind of cool. We can go here, and there's a way of doing it. There's a way of doing it, and you can create a watch list. Yes, look, save as a watch list. And I can go here and go save as watch list. And then the watch list this is going to be the this is forward testing. Forward testing, August 2021, and save, and there it is. Oh, and then it takes away my list. So good point. How do you get back the list when you make an error like that? You don't. Right there. There's the list. Look, forward testing. Now, what's kind of cool about this one, though, this is kind of cool, is because, and we arrange it by volume as we did earlier. So I have to see now what is with this. Oh, I know. I have to load the forward testing that I want. Forward testing. Forward testing August 21. There's the one we want. There it is. And now we arrange our volume, which there's back to forward. And now we're back on track. And there's AR, which we just did. And now we just click here. This is the beauty about having the watch list, is that you can just click and it just goes right to the chart. And we will grab a Fibonacci matrix or measurement. Now, how do you set this up? Well, you got to go to your drawing tools over here down below. You got to go to Fibonacci retracement, which is that one there. You would click this here on, and then, well, then when you get it on screen, you draw it on screen as such, and then when you right click and hit edit properties. Now you have it. And now you can see how I set this up. So look at this very carefully. To set up the 3-to-1, 0, of course, is the red line for the initial loss. Midline, which I like to have because if it's too wide, I'll use the midline as a stop also. If it's AB is too wide or the entry exit price is too wide, and then go 1, 2, 3, 4 all the way down, and then color code as you wish. You can see my color code here. Now remember, the 0 starts, the count starts here. The 3-to-1 is right here. This is your 3-to-1. This is your loss ratio. This is your loss ratio here. This is your reward ratio. That's why this when you need 3. 1, 2, 3, right there, it's actually a 4. And that's by doing dark, and then I do the other color shades. And then you hit OK. And then you set it as a factory result. And then you can set it as, to save as default, and then hit OK. I'm not going to do that because mine's already done. So that's another, I'm going to remove that one. So, okay, now you can click on here to be a, these guys, I don't know. These guys, I don't even know who they are, but they're showing up now. So, did example. Remember, I told you about the AB wide. You can have it down here, and if after the trade initiated, you can put your stop there if you wish. Yeah, you put your stop right there, 50% retracement from the entry to the possible exit, and you can go there and take it. Remember. Now, remember what Jack Schwager said to the traders. He said, "The types to stop, aren't you getting a lot of stop outs?" And the answer is yes. But the counter, or the good part about that, is that you're keeping your losses small. So you might end up with maybe out of 15, you might end up with 10 losses. But if 10 losses are only running an average of -5%. And then your other 5 are hitting a 30 or 50% ROI, which we've seen easy hit 50% on these past videos. So there you are. You lose 10 times 5 is -5 is 50%, but then you have 5 who come in with 50%, 250% return minus the 50 you lost. You have a 200% ROI return. Overall, that's the theory mathematics. Now, of course, it's practicality and making it work. Okay, so here we are. And so then this is how on RTX is on our chart. Yes, RTX qualified. And RTX is going to be going in for a trade. It owes 881, and we'll be setting up that trade right here, right there at the top of that body. To the green low, to the lower price channel. It's almost $3.80, 258. It's in ballpark. 2 ATRs. I like to take within 2 ATRs, plus or minus a little percentage. Okay. So you can see we had a real jump today in this market. Now here's a good example. This is 54 cents, and this is $2. Well, so it's actually almost $1.50. Yeah, it's almost $1.50. So that's 3x. So again, we got to get past that entry point. We go to the EPS, and then we can decide yourself what your risk management is. You're going to go with the pros and take the smaller hits, but you knowing that you have confidence that the strategy, the trading plan is going to reach up and then hit the 3-to-1. And you can do this. You can do at that time. You can go ahead and set up a set and forget it trade. Once you move your stop to the EPS, and you can put in the exit code. If price is 41.89 or higher, exit, and then it automatically exits you on that trade. And there are traders who do that who are very busy, who don't have time to keep checking their accounts all the time, so they'll do a set and forget trade. Another way, of course, is you hit the 3-to-1 and you go last bar low, as you have seen demonstrated, or you can go swing low. Right, moving on to the last one, that's Liberty. And Liberty Global. And there's our top of the body. I'll sometimes go to the wick. If it's real narrow, I'll do the wick, because I do want to give it some definite room. All right, so that is an explanation for forward testing. Back on track again. And we're only going to be doing forward testing stochastic uptrend. Now, why is that? Because the market is geared to the upside 70% of the time. Yeah, you've seen pullbacks where you have the 300 and 400 sell off of this or that. But what happens 30 days later? It's back up again. I mean, let's look at our last major pull down, correction, crash, whatever label that people want to use, because I've used it. I say the word crash and someone says, oh no, that was just a correction. Then I use the word correction, so oh no, it was a crash. So everybody's perspective is so different. But the bottom line is that the market went really sharply down March 2020 because of the corona thing. So now, where is the market today? A year and a half later, almost a half year later, next month, we're up again a lot. And now people are yelling, oh, the market's overheated, and we're looking for a real estate bubble crash, and we're looking for this. We're looking at these week's fundamentals, and the Fed's still printing out money, and inflation is going to be coming back. So the paper dollar now is cheaper. So instead of paying, like it's a good example of my wife shopping, she'll go and we'll go look on corn sales, and one day we'll discover corn's 5 for $1. Great. And then the following week, corn 2 for $1. Yeah, 5 for $1 going down to 2 to $1. That's inflation. That's inflation that you see in the grocery market. I mean, right now she'll go and she's looking at steaks, and she'll say, "Oh, I like the steaks," but she's cost conscious. That's who she is. She's a bargain shopper, and she'll say, "Nope, when it goes on sale, that's when I buy. I'll stock up. Not on sale, I'll wait. Go get something else." If beef is not on sale, chicken's on sale. Chicken's not on sale, pork's on sale. Pork's not on sale, seafood's on sale. Seafood's not on sale. Something is always on sale. Why? Because they want to keep the customers coming back to buy. Oh, got to turn off my alarm. All right, so what that is the idea of forward testing. The idea of forward testing is to go ahead and mark the charts up, and then we're going to keep a list like you just saw. We have our list, and now when we come back tomorrow, we'll go through the list and then start knocking anybody who lost off the list and start tallying up those losses. And when the scanner comes back with additionals, we'll add them. How to add? Right there. Go right there and you put in the ticker symbol here and then click off it, and then you have it. So let's go ahead and do this as an example. Oh, everybody loves Apple. So then we'll put Apple, and there's Apple. And now if I want to get rid of Apple, I blank it out, hit return, gone. And that's how you can add to your list. And having the list is really cool because it makes it a lot easier to get access to when you want to look at the chart. And then you right click on to get auto zoom, excuse me, and then you're able to get the setup right here to get to the chart and then do your markup. So that is really a massive overall lesson of forward testing. So essentially, it's a full lesson, forward testing. There are a couple little tiny caveats, but you got 80%. You got full 80% on how to do forward testing to see if your trading strategy works. And then if you can write down your trading strategies and do the rules, and then the rules are convertible to a scanner where they can be listed, such as that. And now you have all your listing right there, and then you go over here to this side and go save, and then you name it and you save it. And if it already has the same name, okay it, overwrite it, and now you have your scan. And now you're ready to roll. All right, with that said, let's go ahead and conclude this lesson today on Stochastic Uptrend, starting over with 0 wins and 0 losses for the Stochastic Uptrend. And I thank you very much for stopping by, checking it out, and hopefully this has been helpful for you. Bye-bye.